S&P 500 sliding for its sixth straight day on this Wednesday, breaking below the key technical level, that's the 200-day moving average, while the NASDAQ is flat. Let's see what this market movement means. We're joined by Hilary Kramer. She's Chief Investment Officer at A&G Capital. Well, Hilary, welcome. Today's action, how do you interpret that? Is this a relative calm before the storm, or are we due for, is this oversold market due for a bounce back?
Well, I think we will see the market come back before the midterm elections, absolutely. But we're going to see a lot more selling because you have incredible jitters, both on the institutional side and individual investors. Trillions of dollars have been made, and everyone's running for the exits right now.
So in other words, we haven't seen, I guess, what a lot of market strategists like to say is capitulation.
Right. No, we're not there yet. And what we might end up seeing is that drop we had two years ago in 2016, where we went down 9.99%, and then boom, we bounced right back up, and it's been a bull market ever since. So we will see the market come back up because we will have some intervention that will take place, as well as you have short sellers that are holding out, and once they start to cover, I think you're going to see everything turn around, especially the technical traders will come back in, and there are opportunities out there.
We'll talk about the opportunities in a second, but when you say intervention, what sort of intervention do you foresee?
I think that Chairman Powell will come out and say that the December rate increase is off the table, and that's going to send the market flying up, and then everyone, it's greed and fear, and all the greed comes out. Everyone says, oh, I'm going to miss that rally, and that turnaround, everyone piles back in, and then all the technical indicators get all those traders back in, and we're going to be just fine, and we'll have that Santa Claus rally going into the end of the year.
We didn't see panic selling in the form of a flight to safety yesterday. We didn't see bonds investors going after bonds or perhaps gold. What does that mean?
It means that this is a very serious concern where the only thing that anyone was flying into was some of like gold and cash. But that doesn't mean that there aren't some stocks that we're going to start to see some buying into, because a lot of those institutional managers, we have to find places to invest, and we need to put the money somewhere to work.
And Hilary, where are the opportunities that you see?
Right now, you want to be in the financials, especially the investment banks. Morgan Stanley, Goldman Sachs, they report on October 16th. Those stocks are at 52-week lows, down 24%, 22%, respectively. And we're talking about companies that make billions of dollars on mergers and acquisition revenue. The capital markets have come back, and all this volatility means trading revenue.
All right. What about the traditional areas?
You want to be in those consumer staples, especially the consumer product companies. Go into Procter & Gamble, PG. I love General Mills here, GIS, in the low 40s. We're talking about over a 4% dividend yield, and a company that's really shedding some of the traditional areas, and really everyone's heading into coffee, pet food, and we're going to see those portfolios start to really improve in terms of revenue, margins, and also you're going to see value investors start to pile in those. That's where everyone goes when they get nervous. They especially go into Hormel. Everyone thinks we're all going to end up eating spam.
All right, before I let you go, so you see a deep correction, a correction to come,
yes.
Still, perhaps maybe 9.9% or whatever. But you say Santa Claus rally. So what gives you the optimism that the markets will bounce back right now?
Well, again, it's the intervention, and it's the fact that the United States is still the best game in town. When you have to look in a relative sense. Everyone's going to start to put their money here in the U.S. We're already starting to see glimpses of that with some of the transfer of funds, and when that happens, the market will come back. Plus, we have Black Friday coming and Thanksgiving, the Friday after Thanksgiving, all the shopping will take place. There's a lot of concern right now. There's this whole overhang. Are consumers going to be spending? And I think the consumers will be out, and there will be enough optimism so that all of the areas of the market will improve. And even something like car sales, even there you still have an annual rate of 17 million cars being sold. So except for real estate and housing, which are in bear market territories, and it's going to get a lot more painful and a lot worse with these high mortgage rates, other areas of the market are going to be really strong, and places where you're going to actually see double-digit returns, maybe between now and even year end.
Okay, very optimistic and always seeing opportunities. Thanks a lot, Hilary. Our thanks to Hilary Kramer, Chief Investment Officer at A&G Capital. I'm Fred Katayama, and this is Reuters.